Solomon wants to make sure that every dollar earns and it is not sitting idle. It's a Solana native stablecoin USDv that stays spendable while paying 21% yield. And its public ICO runs on MetaDAO this Friday. Today I'll be telling you about what the project is, how you can participate in the ICO, and an interesting math behind the trade plan. So what exactly is Solomon? So Solomon is a composable dollar on Solana. It's USDv is the spendable stablecoin that they have, and then they've got SUSDv, that is the staked version that collects yield or generates returns. The system captures yield via delta neutral basis engine and stream rewards to holders or eligible wallets without breaking dollar utility. If we look at the pre-sale or ICO details, it's happening on November 14. It would go on for 4 days till November 18. It starts at 18:30 UTC, also ends at the same time, and that would be happening on MetaDAO. The asset that you would need for participating in the pre-sale is USDC. The public state supply that they've given for the pre-sale sits at 10 million Solomon tokens that is distributed pro rata. The final accepted USDC determines the allocation that you would be getting. The treasury liquidity is 2.9 million tokens, that is for solo seated for decentralized exchange liquidity once the token launches. And treasury pairs 20% of the USDT with that supply, so 20% would be going to the treasury of Solomon. The team would also get an allocation of 12.9 million Solomon tokens, and it only unlocks on a multi-step performance triggers after 18 plus months. So the minimum raise that they're looking at is at $2 million. If it is not met, all the money would be refunded. Ideally, they're looking to raise around $7 to $9 million is what they're expecting, or what they would accept as a raise. If the cap sits at $2 million, the price would be at $0.2 per Solomon, and that gives us a fully diluted value of $5.2 million. So it would start at $5.2 million if it raises $2 million, and essentially if it reaches $100 million. So 5 million to 100 million is almost a 19 times return, 19 or 20 times return. The second scenario would be if they raise $5 million, and if we reach the fully diluted value sits at 12.9 to $13 million, and if it goes to 100 million, that's a 7 times return if just the fully diluted value reaches at 100 million. If the cap sits at 8 million, if that's what they raise, and the FDV becomes 20 million. The fully diluted value sits at 100 million, so that's almost a 5 times return. So what is the total value log? What are the stats? They're already live with the beta project. So we look at the total value log, sits at $1.4 million, and they've been running this project already for an entire year. If we look at the average returns, it has returned 25% in the past. Currently, it's giving 21% return. And where does this return come from exactly? You must be wondering, because 21% is too good to be true. What they essentially do is they buy it on spot, and they essentially short it on future. So they see the funding rate arbitrage, they try to earn the yield from the funding rate. So that is where it's a market neutral basis strategy. It captures perp, and it short is, and it longs from spot. So perp short, spot long. And it's got good custody and control. So asset largely in institutional custody. They've got Cefu, which is for the custody, and they've got on-chain dashboards, and audits are clearly available as well. It's a composable dollar, so USDv stays spendable and usable in DeFi while still earning yield via SUSDv, or it's known as yield as a service, YAAS. What's the key risk? Its APY depends on funding rates, execution, centralized exchange access. Returns cannot compress if conditions change. So now let's take an example about that 21% or 25% yield that we're talking about. So say you invested $10,000 at 25% APY for 20 years, you would be getting $867,000. Or for an INR example, say you decided to take 10 lakhs at the same 25% APY for a period of 20 years, you would be getting 8.67 crores in 20 years just by investing 10 lakh rupees. Obviously, remember, this is not financial advice, and always consult your own financial advisor before making any financial decision, because crypto is highly volatile and risky. So what's the verdict? Solomon is a pragmatic attempt to make dollars earn while remaining composable. It's proven in beta with institutional controls and high reported APYs. The ICO on MetaDAO is mainly about distribution and scale. Watch the final accepted raise size, because that drives your allocation and implied fully diluted value. Treat early exposure as a yield experiment, small size, clear risk control. So that's it for today's Coincheck. Thank you for watching T-Doro TV. Subscribe to our YouTube channel to be updated with the latest news and developments happening in the Web3 space. I'll see you guys again on Friday, and goodbye for now.